Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model for Tuesday the 9th of the 2nd 2021. The time is 0440 GMT in the morning. Asian session coming to a close, European session firing up shortly, and our lunchtime is the North American US session. So let's make a start then. So yesterday, Monday the 8th, we had a negative opposed driver in the dollar at minus 44, and so we had front and backdoor flows going mainly, the opposing positive flows were mainly going into the pound at plus 35, next into the yen at plus 11, and finally the euro was the negative rock at minus 2, and that was an activity of plus or minus 46. Now over the week then, intra-week, so this is from the Monday, yesterday's open till about 15 minutes ago, we've got an unusual situation, well less unusual recently. We've got a negative unopposed driver in the dollar at minus 140, so no backdoor flows, and the flows, the opposing positive flows, mainly going into the pound at plus 74, next the yen at plus 48, and finally the euro at plus 18 as the positive rock again. So let's look at intraday then before we do some analysis. So intraday, which is today, which is Tuesday the 9th of the 2nd. So what have we got? We've got dollar again on its own on the negative, euro pound yen, and plus 42 for the yen, plus 41 for the pound, and plus 17 for the euro, and minus 100 for the dollar. So we've got a negative unopposed driver in the dollar, a positive rock in the euro, positive mover in the pound, and a positive secondary driver. Right, good. Positive secondary driver in the the yen. Right. So as usual, what's going to knock this around now? Now we've been having some economic calendar issues. People have been hopping in and out of their schedules. So anyway, the current situation as far as we're concerned is Tuesday. Today we've got the German trade balance out, which is a tier 2 event, and yesterday we had German industrial production, which came in slightly soft, and tomorrow then we've got China CPI, German CPI, and US CPI. So we're starting to get an inflation metric coming out, boxing us in, and also the Fed was speaking yesterday. And what was the Fed saying? They're saying that the policy is not going to change anytime soon, and they're recognising that there's growth in the US economy, and there's a start of inflationary expectations. So they're sort of bucking the trend, if you like. They're doing massive fiscal stimulus, and in Keynesian terms, they're deliberately overheating the economy. Right, well that's by the by. Anyway, so let's look at what's been going on then. So yesterday we had a negative opposed driver in the dollar. If you remember, last week the dollar was overall strong, but the fall in the dollar started Friday after NFP, because that came in unexpectedly soft. So yesterday we've got a continuation. We've got dollar dollar softness is weak, and the usual sort of donut place to put put opposing positive flows is into the pound at the moment. So that's what's happening there. And as you know, we're short the pound, so this isn't a helpful approach. Maybe we're the donut, who knows. Anyway, intra-week, we've got more extreme dollar weakness here. You can see that the dollar is now the unopposed negative driver, which means, as I say, one of two things. It means that the dollar's either at a floor or it's the start of a further dollar ramp down. Anyway, I'll talk about that in a minute. And intraday then, we've got a similar situation. So far in the Asian session, they've just followed suit and basically hammered off the dollar. Right, so what else? So let's rub this out and make some sense of what we're doing. So we added, we're now short euro dollar. What else? And we're short pound CAD, which was we were before. We're short pound dollar, short pound yen, and we're long euro pound. And the common theme obviously is we're short the pound. The one we've added to is the euro dollar, and yesterday we suggested that the shorting the cable, the pound dollar, was likely to be the star of the show. Well, it certainly helped us in yesterday morning, and then they turned it around. So anyway, that's irrelevant to us. We're not worried about individual noise flows. We're trading the models. So there you go. So what's been happening then in the equities? Equities are at record highs. Gold has had a bounce off the back of this sell-off in the dollar. Dollar index has obviously been pushed down again, and oil is still steaming. Oil is the trade that we got right that we didn't do from pretty much the start of the move, and copper's now so copper came off and started to not look happy, and now it's operating around there, so it's reluctant, mainly I would say off the back of equity flows. It's just the sheep factor that stocks are rising, and therefore they think we're in a global growth phase. Anyway, so what's happening then? So dollar, euro, yen, pound. We're still at a model top in the pound, so it's just a case of brassing it out and waiting for the rest of the market to work it out. So the pound is likely to come off. The dollar has come off. Now it just depends on the timing. So we've got a situation where we think that the dollar is at a floor. So the dollar is likely to rise again. The euro, we think, depending on the pair, is at a top, and the yen, you've got this equity punch. The yen has been basically degraded by record equity flows. So we think the yen is at a floor as well. So that's what we're looking at, and that sort of ties in with our trading. Obviously, the market is in a transition period. It's in denial on those flows. There's lag. Take your pick. We're sticking with them and managing the positions, and we're waiting for the flows to start to behave. But basically, that's our positional trading, and these are the actual flows. If it carries on, then you're going to see dollar weakness and all the usual stuff. You're going to see dollar weakness, a bit of pound strength, are basically not much different to here. The yen's come up a bit because equities have come off in the Asian session. But anyway, hope that was useful to you. See you tomorrow for the daily briefing. Thank you very much.